Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Mdu Resources Group Inc. Annual Report. Mdu Resources Group Inc. operates in the regulated energy delivery business in the United States through three main segments: electric, natural gas distribution, and pipeline. The company generates, transmits, and distributes electricity in 5 states, including Montana, North Dakota, South Dakota, Wyoming, and possibly others not mentioned. In addition to electricity services, Mdu Resources also provides natural gas distribution services in 8 states, including Idaho, Minnesota, Montana, North Dakota, Oregon, South Dakota, Washington, and Wyoming. The company offers related value-added services, such as transportation and storage services, through its pipeline system, primarily in the Rocky Mountain and northern Great Plains regions. The company's services also include cathodic protection, non-regulated energy-related services, which are provided to customers outside of the regulated pipeline system. Overall, Mdu Resources Group Inc. offers a range of businesses and services related to electricity generation, transmission, distribution, natural gas distribution, transportation, storage, and value-added services. Unfortunately, I do not have access to the text you provided. However, I can still provide a general overview essay on what could cause a stock price to increase. The stock price of a company like Mdu Resources Group Inc. can be influenced by various factors that contribute to its overall performance and growth prospects. One key factor is the company's financial health, including its revenue growth, profitability, and cash flow generation. A strong balance sheet with low debt levels and sufficient liquidity can also boost investor confidence. Another significant factor is the industry trends and market conditions in which the company operates. If the demand for Mdu Resources Group Inc.'s products or services is increasing due to growing economic activity, technological advancements, or demographic changes, it can drive up its stock price. Additionally, a company's ability to adapt to changing market conditions and stay competitive through innovation and strategic investments can also contribute to its stock price growth. Furthermore, external factors such as interest rates, inflation, and government policies can impact the stock price of Mdu Resources Group Inc. If these factors are favorable, they can create a positive environment for the company's stock price to increase. For instance, low interest rates can make borrowing cheaper for companies, allowing them to invest in growth initiatives and boost their stock prices. In conclusion, the stock price of Mdu Resources Group Inc. is influenced by a combination of internal and external factors that contribute to its overall performance and growth prospects. By understanding these factors, investors can gain insights into what drives the company's stock price movements. Mdu Resources Group Inc. maintains a market capitalization of $4 billion, broadly in line with the industry peer group. Mdu Resources Group Inc. trades at a higher price-to-earnings ratio of 22 times and a lower price-to-book ratio of 1.52 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that investors are already valuing the industry with a forward premium for the industry, leaving limited opportunity to uncover undervalued stocks. The leverage on the balance sheet appears elevated, with liabilities of 62% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has increased, while revenue and shareholder equity are declining. This indicates that management has not yet proven the business model is sustainable. This makes the investment case highly unfavorable. The company have a dividend yield of 2.72%. The income statement shows that the company revenue have been declining annually even though operating income have been improving. Although the drop in revenue is concerning, we can tell that management have been able to reduce cost. The primary drivers of revenue growth for a company can be attributed to several key factors. Firstly, an increase in retail sales revenue due to the operation of a data center within its service territory has contributed significantly to revenue growth. Additionally, growth in wind generation capacity, with a notable 40% of electricity delivered from renewable resources by 2025, has also played a crucial role. On the other hand, there are several drivers that have led to revenue decline. One major factor is the decrease in average customer consumption due to the increasing adoption of energy-efficient lighting and appliances. Furthermore, competition from various sources such as rural electric cooperatives, on-site generators, cogenerators, and municipally owned systems has also contributed to a decline in revenue. Moreover, alternative forms of energy like natural gas have been competing with electricity, further exacerbating the issue. The net income of the company experienced a decline over the 3-year period from 2023 to 2025. In 2023, the net income was $414,707, which decreased by 32% to $281,108 in 2024. This downward trend continued in 2025, with a further decrease of 33% from 2024 to $190,395. Despite this decline in net income, the company's profit margins showed an initial improvement from -2.33% in 2023 to -1.56% in 2024, indicating a slight increase in profitability. However, this trend was short-lived, as the profit margin decreased significantly by 1.63% to 0.07% in 2025. The low positive value of 0.07% in 2025 suggests that the company's profitability has been severely impacted compared to previous years. Mdu Resources Group Inc. is generating positive operating cash flow. The company's financial reports indicate a significant increase in net cash provided by operating activities of continuing operations. In 2025, this figure stood at $115,261, which is a substantial amount that confirms the company's ability to generate positive operating cash flow. This trend is also reflected in the projected figures for 2025, where it is estimated that the company will have a positive operating cash flow of $137. The company's debt level and interest expenses have remained relatively stable over the past few years. According to the extracted summaries, the carrying amount of debt increased from $2,292,610,000 in 2024 to $2,676,855,000 in 2025, but this increase is not significant enough to be considered substantial. Furthermore, the weighted average interest rates for senior notes and term loan agreements remained unchanged at 4.76% and 4.68%, respectively. In terms of interest expenses, there was a slight increase from $642 in 2024 to $761 in 2025, but this is not a significant change considering the overall financial landscape. The company's ability to manage its debt level and interest expenses effectively suggests that it has been able to navigate any challenges posed by rising borrowing costs on variable interest rate debt. Overall, while there are some minor fluctuations in the company's debt level and interest expenses, these changes do not appear to be significant or cause for concern. The extracted summary highlights the performance of various segments and regions within the company. Notably, the natural gas distribution reporting unit stood out with a strong performance, as its estimated fair value exceeded its carrying value by approximately 41% in 2025. Unfortunately, detailed financial information is lacking for several key segments, including electric segment, pipeline transportation, and construction materials. Without this crucial data, it is challenging to assess their overall performance accurately. As a result, the assessment of these segments' performance remains incomplete. Management is optimistic about the company's outlook, citing adequate capacity to meet peak customer demand requirements through existing resources and future additions. The company plans to construct new generation resources or acquire additional capacity to ensure future needs are met. In terms of financials, management has made significant progress in reducing debt. All outstanding debt was repaid in the second quarter of 2023, and credit facilities were amended to extend maturity dates and improve terms. Additionally, senior notes with long-term maturity dates have been issued to further manage debt levels. The company is projecting strong revenue growth, with expected earnings of $4.3 billion, net income of $243 million, and earnings per share, EPS, of $2.53. A risk management program is in place to identify and mitigate potential risks related to operations. The company has made significant investments in its operations through acquisitions, which have expanded its capabilities and presence. One notable acquisition is the 49% ownership interest in Badger Wind Farm, acquired in December 2025. Additionally, a new peaking unit was added to the Heskett station near Mandan, North Dakota, with construction beginning in May 2022 and operational by July 2024. On the other hand, the company has also divested certain assets through spin-offs. Specifically, Knife River and Everest were separated from the company through these transactions. Although no specific details are provided for the Knife River spin-off, it is clear that the company has been actively managing its portfolio to optimize its operations and focus on key areas of growth. The company has a history of paying dividends to its shareholders. According to the financial reports, the company declared significant amounts in dividends for the years ended December 31, 2025, 2024, and 2023. The exact figures are $110.3 million, $103.9 million, and $141.5 million, respectively. Additionally, the reports also provide a breakdown of the actual dividends paid, which were $108,244 in 2025, $102,939 in 2024, and $161,316 in 2023. However, there is no clear information provided on share buybacks by the company. The extracted summaries do not mention any details regarding the purchase of shares or repurchasing them from the market. There are no explicit concerns about inventory buildup or supply chain disruption in the provided summaries. However, there is a mention of coal supply agreements with various companies that expire at different dates. This could potentially raise some questions about future supply reliability and potential disruptions to the company's operations. Nevertheless, Montana Dakota Utilities expects to have adequate capacity available through existing baseload generating stations and firm contracts to meet peak customer demand requirements. That concludes the financial summary for Mdu Resources Group Inc. Feel free to comment below, and I will be happy to answer them when possible.